Hello and welcome to our podcast, your go-to podcast for all things tax and accounting related. Please subscribe to the channel, VHA Accounting Solutions Podcast. I am your host, Vidyanth Bhola, and today we are diving into the proposed VAT amendments for 2024. This year amendments are packed with significant changes and could impact businesses in a big way. We are here to break down the key points, share our insights, and explain why it's critical for taxpayers to weigh in these changes before they come into law. So let's not waste any time. Let's get started. First, let's talk about amendments matter. The proposed changes are not legal jargon. They could affect the way you manage your business finances, file your tax returns, and ultimately your bottom line. The first proposed change is the period for the deduction of input tax. The first key amendment up for discussion is the deduction of input tax. Under the current VAT Act, you can claim input tax in the period when the supply occurs, provided you have the right documents to back it up. If not, you could roll it over for up to 5 years. But here's the kicker. Under the proposed amendments, no more rollovers. You'd be required to claim your input tax in the period you became entitled to it. No exceptions. This means you'd have to reopen prior VAT returns if you missed claiming input tax. It's important to note, if you try to claim in a later period, SARS could disallow it and hit you with penalties and interest. So what challenges does this bring? Think about the complexities of e-filing. You can't increase input tax once it's filed, and correcting a return is even more of a nightmare if it's been through the verification or a dispute process. Plus, imagine having to go back and revise multiple VAT returns. Not only would this create accounting headaches, but it also opens the door to human error and mismatches in your books. Changes to the Electronic Services Regulations. Next up, Electronic Service Regulations. Back in 2019, these regulations required non-resident supplying electronic services, whether to businesses or consumers, to register for VAT. But now, the draft 2024 regulation pose excluding B2B, business to business, or supplies from this definition. Seems like a relief, right? However, the proposed wording introduces some confusion. What happens when a non-resident makes both B2B and B2C, business to customer supplies? Will they need to charge VAT on everything? It's a gray area, and it's one that the taxpayers should weigh in to avoid any further legal ambiguities. Next point up for discussion is the reviewing of the FDFP regime. Let's shift gears to the Foreign Donor Funded Projects, or FDFP regime. Since 2020, every project funded by a foreign donor required its own separate VAT registration. This has been a logistical nightmare for implementing agents, leading to multiple VAT registrations and soaring compliance costs. So what is the proposed change? Implementing agents would only need to register one branch for VAT purposes, which covers all their FDFPs. This simplification is welcome, but it's important for the taxpayer involved in these projects to give feedback on whether the solution truly alleviates their administrative burden. The next proposed change, we jump into VAT relief for non-resident lessor. Now let's talk about some relief for non-resident lessors. These are suppliers of ships, aircraft, or rolling stock under rental agreements. Up until 2023, they had to register for VAT in South Africa, but that requirement was lifted. However, when they deregistered, they were still stuck with unintended VAT liability. The good news, the new amendment proposes VAT relief on that deregistration liability. But interestingly, this relief only kicks in from the 2025 and not reactively to 2023. Why the delay? That's a question worth asking. The next one is clarification on educational services. Now, onto the educational services sector. Currently, educational services provided by qualifying institutions are VAT exempt. However, there's been confusion around whether services that are incidental to education should also be exempt. The amendment aims to clear up this. All suppliers, whether they are educational or related, will be exempt from VAT. This could simplify things for educational institutions, but it does not create an unequal playing field compared to third-party suppliers who must still charge VAT on similar services. If you are an educational institution, now's the time to provide input. The next topic is VAT treatment for Muraba finance arrangements. Next up is something for those involved in the Shria compliant finance. The proposed amendments will extend VAT exemptions to Muraba financing arrangements, which is a welcome change for those using Islamic finance. Including this form of financing under Section 8A of the VAT Act provides clear guidelines and relief for those adhering to Sharia law. The final thing that we're going to look at is the casino industry. Lastly, for those in the casino industry, there's a proposed regulation to account for VAT on the gross gaming revenue of table games of chance. This aims to simplify how casinos report VAT on betting transactions, making it easier for them to comply with the VAT regulations. Folks, to conclude, that's the wrap on today's episode. These proposed VAT amendments for 2024 are significant, and they have a potential to impact a wide range of industries, from educational and finance to electronic services and beyond. We urge all taxpayers to carefully consider these changes. If you have any questions, feel free to reach out to us. Our website is www.vhaaccounting.co.za. Thanks for tuning in, and don't forget to subscribe to our podcast for more tax and accounting updates, and we'll catch you on the next episode.